As economic statistics fall with a sickening thud all around the world, Earth's central bank mafia is beginning to wonder if maybe they screwed up. Earlier this week, the Wall Street Journal published a world tour of the shelled-out remains of statistical series in the wake of a coordinated global assault on interest rates. An assault that apparently has not worked, as core inflation, the kind that matters to central banks, has now been stuck for years and is still, even by official numbers, over 5%. In recent videos, I've covered how both China and Europe are falling over, with half of China's economy now in contraction, and even mighty Germany losing its manufacturing base. But it is looking like the problem is global, which should not be surprising since the COVID lockdowns were also global. They played out the same in most countries, which is spend all the trillions it takes to bribe the sheep into shutting down, and then crash the productive economy to soak up the resulting inflation, with, as the Journal put it, a coordinated rate rise campaign unprecedented in its scale and its scope. Starting with Europe, fresh data says the entire economy has now contracted in the 3 months through September. One more quarter, and that is a formal recession. The latest surveys of European purchasing managers point to yet more decline, with new orders falling at the fastest pace since the lockdowns. Hamburg Commercial Bank now estimates Europe is looking at an annualized decline in GDP of 1.6%, which is just shy of the first quarter of the 2008 financial crisis. The survey noted ominously that poor performance in manufacturing is now spreading to services in Europe. Now, those are 3 times bigger than manufacturing. In fact, they make up 2/3 of the entire European economy, so that is the big enchilada. Next up is Old Blighty, with British purchasing managers similarly pessimistic, and JP Morgan now estimating stagnation for the past 3 months and the next 3 months, which would punch Britain's golden recession ticket. And finally, America, where core inflation has been stuck for going on 3 years now, and it now faces brand new perfect storms, from energy and student loans to an El Nino drought to unions gone wild. America's new orders are now falling for goods and services, in other words, for everything, while business confidence just hit a fresh 9-month low. So what's next? Brought to you by Unchained. What's next is we're not even in the third inning. Eurozone rates only cleared zero a year ago, and they haven't even hit the traditional restrictive level yet. The Fed is not much better, having only hit restrictive rates a few months ago. So going by the traditional 12 to 18 month lag between rate hikes and economic devastation, it is way too early to be seeing recession signs already, meaning that we are most likely looking at years of pain, perhaps comparable to the 2008 financial crisis, that will get much worse as the months tick by. By mid to late 2024, we will know exactly what the Fed and the rest of the central banker cartel have dumped on our living room carpets, at which point millions of people will be wondering what the heck hit them. Okay, we'll be watching. See you next time.